Coach, DSW, and American Eagle are the latest companies to announce an accelerated dividend payment ahead of the fiscal cliff. Yesterday, Oracle said it was moving up 3 of its 2013 quarterly dividend payments to this year. It's a nice payday for CEO Larry Ellison, who's going to take home about $199 million. Dennis Berman is the marketplace editor for the Wall Street Journal, also a new father.
Oh, thanks, Carl.
Dennis, you look way too rested.
I know. Well, I hope my boy is not watching me right now. I hope he's asleep and being a good boy.
Let's talk some dividends. Congratulations, by the way,
Thank you very
Dennis.
much. Thank you.
So happy for you. Let's talk some dividends. Is this for the good of all shareholders, or is this purely a personal decision?
Well, I got to say, smoke them if you got them. And right now the market is saying, give us our dividends. What we've been looking at the Journal, and if you want to go to the website, you'll see a list of dividends and the percentage of insider holdings for those companies that have produced those dividends. You see some companies, like you mentioned, where there's not a lot of insider interest. But, of course, there are companies like Oracle. Larry Ellison owns about a quarter of that company, where there are some substantial personal dividends paid to insiders who run or own those firms.
Is it dangerous or not, in some cases, to finance this dividend? Some have argued that already companies are maybe not leveraged enough, their balance sheets are not efficient enough, or is this truly a dangerous call out on the risk curve?
Well, Carl, you asked, I think, the perfect question. And right now I'd say there's probably not a danger. We see where financing rates are. You know where they are. Money is cheap right now for corporations, particularly well-rated corporations. And, like I said, smoke them if you got them. So if you're Alexander's, which is a REIT, if you're Gamco Investors, if you are Dish Network, Westlake Chemical, all these companies with significant insider ownership, they've all created special dividends. Not all of them are, of course, borrowing to fund them. But I'd say right now it probably, and we need to pencil out the math together, perhaps, Carl, but the value today of saving some tax hit potentially in 2013 is probably greater than what interest expense you would have to borrow that money.
What happens to these names after the payout, Dennis? Do they go back to revert to their former selves?
Well, isn't it funny? I mean, there was this big crush of dividends once they started, and now you on CNBC, us at the Journal, were sort of have bated breath, keeping track of who's doing what. But essentially, this behavior has become normalized. I think, if anything, companies that aren't issuing dividends will probably have a penalty in the marketplace in the next 3 to 4 weeks. But post that, I'd say January 1st, all racers back to the starting blocks, and they'll have to basically live up to their performance on a general actual stock appreciation basis and less of a dividend basis.
Finally, the guessing game has been fun. We had Oracle on some screens a couple weeks ago, and sure enough, they're at Pop last night. Are there surefire, cannot miss special dividends that you see coming in the next couple weeks?
I would love to see some of the real big industrial companies perhaps do some dividends. Could General Electric do something? You'd probably think not, given their recent history with some rollbacks. But I think that's the next shoe to drop here is the real big companies. A lot of these companies are relatively small.
Right.
The big ones, I say, are next. But I got to say, Larry Ellison, man, that is a heck of a payday. $200 million in one check. It pays to own. It pays to own.
It does. That could buy a Hawaiian island. Oh, he already has those.
He does.
Dennis, get some rest. Again,
Thank you very much.
Congratulations. We'll see you next time.
I appreciate it.